This is NDTV. And you're watching NDTV Prime. In association with Micromax. Nothing like anything.
For the past 3 episodes, we've been exploring why India needs to build a new financial architecture and from where are small businesses getting access to the credit that they deserve. Because as of now, corporate India is nudging them out of the race for any form of structured credit. And this despite their enormous contribution. In fact, take a look at these numbers.
Between 1991 and 2011, close to $317 billion of foreign investment flowed into India's corporate sector. And the bank lending to this sector grew a whopping 43 times to touch 20 lakh crores. But at the same time, the corporate and personal taxes halved, while the Sensex jumped 20 times from levels of 1,000 to 20,000. While the growth in the GDP contribution of the corporate sector touched only 15% from 3% levels. On the other hand, the non-corporate small businesses who have been contributing a whopping 45% to India's GDP have received less than 15% of bank credit.
So just imagine if this sector would also have got some kind of a formal funding system, then even this sector would have shown tremendous growth. Let's get a view from Mr. Praveen Khandelwal now, who is the Secretary General Confederation of All India Traders, who is also National Coordinator for the Action Committee. Thank you so much for speaking with us, Mr. Khandelwal. When it comes to funding for the small businesses, what kind of problems do you face?
See, post-independence, whenever our traders or any sector any segment of non-corporate sector, if ever visit to a bank, so always they demand some kind of documents. And the nature of working in which we undertake our business activities are as such that we are generally not able to comply with. So therefore we are not getting required finances from the core banking sector. That is why only 4% of non-corporate sector could able to obtain finances from the banks.
What kind of solutions are being worked out to get a solution for this particular problem?
The government should create a viable alternate financial architecture for non-corporate sector. It can be a finance corporation, it can be a finance company, or it can be any entity from where the non-corporate sector can obtain finances easily without any bureaucratic hurdles and at a low interest rate.
Like I mentioned initially, there is an action committee which the government has formed under Mr. Kamath, and there is an action committee which you are also a part of, you are the national coordinator for. What kind of recommendations, what is the action plan, how exactly is your action committee working?
Our action committee is conducting a in-depth research and study of the financial requirements of non-corporate sector, what were the causes which prevented the non-corporate sector to avail finances from core banking sector, and what are all those circumstances under which we require finance. And accordingly we will submit a detailed study to the action committee, to the committee headed by Mr. Kamath and to Union Finance Minister. And we will also give our recommendations that any financial architecture, if it is constituted, should be constituted on ground realities. It should not be another entity like banking sector. Already we are fed up with the present banking system. So we need a very cohesive entity which can lend money in a short period and without any more bureaucratic hurdles or hassles.
If I'm not wrong, the committee under Mr. Kamath is likely to submit its report within the next 3 months. Yeah. What is the timeline that you have? When will you be sending your recommendations to them?
Well, I think by the end of November, we will be asking for a audience with the committee, and we will be submitting our report. Our research work is going on, and the entire research will be placed at the discussion level with the members of the action committee, and once it is approved by the action committee, it will be submitted to Mr. Kamath and then to Union Finance Minister and Union Commerce Minister.
Can you tell us a little bit about the Federation and your role in it?
Well, we represent manufacturers and traders of stoves, lanterns and allied products like torch and other matter all over India. This is a very old trade. Before World War II, it was always being imported in India. After independence, gradually manufacturing started in India, and today we can say we are the leading exporter of these products to other countries.
So what, according to you, is the most difficulty that people face in this segment?
Finance in right quantity at right time and at right cost. If we see the entire gamut of finance problems, we can divide them into 4 parts. One is the mindset, second is the documentation, third is the collateral part of it, and fourth is after giving the loan, whatever the procedure that we have to adopt. First, I will speak about mindset. See, our experience is, and that I am sure everybody in our sector will collaborate, is that mindset of banks is not conducive to giving loans in smaller installments. In fact, I had an experience when one of the banker tried to explain to me that look, our spread between what we pay interest and what we get from you is around 2 to 3%. Now, if you take a loan of say 2 lakh rupees, in the whole year we are only earning 6,000 rupees from you. Why should we spend so much of time on you? Right. Of course, this is not a correct vision, or it's not a correct way of looking at it. But this in short is the mindset of the bankers. That is regarding the mindset. Next comes the documentation part. As you might be realizing that many of the businesses old, they are in the rented places. The place do not belong to them. At the same time, they may not have all the documentation, and that is where the progress starts to stagger. Suppose if he manages to cross that hurdle, then comes the question of collateral. Now, suppose if I am going for a loan of say 2 lakhs rupees or 5 lakhs rupees or even 10 lakhs rupees, what collateral I can put before? If my flat is costing say around 1 crore rupee or 2 crore rupee or even 50 lakhs, now nobody in his right mind will like to block a flat of 50 lakh rupees for a loan of 5 lakh rupees. Yes. So that is the next issue. Basically, for a small and medium enterprise, they should not ask for collateral. In fact, government has made a provision to give loans without collateral up to 1 crore rupee. And this provision has been there on the statute books or on the instruction books since almost 2 to 3 years. But if you ask any bank how many loans they have given without collateral, well, the figure will be either nil or negligible. There is one more thing. Even if suppose some people are given loans without collateral, they charge 2% higher interest rate. So that is the third part of it. And the fourth part of it, after suppose even if somebody manages to get a loan, then he is asked to comply with monthly statement, monthly stock statement and all these things, which for a small man, for a small person, is very difficult. So either he has to compromise, either he has to keep the bank managers happy, or he has to forget all the. So ultimately what happens is, it becomes a vicious circle. Banks are not very eager to give loan, and then ultimately it results into the small entrepreneurs not willing to go to bank. So it's a vicious circle which somewhere we have to break.
So in your opinion, what are the possible solutions that can be brought about to overcome this problem?
My suggestion is up to a certain limit, do not insist on collateral, insist on minimum documentation, and you experiment with it and work through the associations. So there is a guarantee, sort of it's a indirect guarantee, but it is there.
And finally, what is the potential that you see in this entire sector if the loans are more easily accessible?
Around 2/3 of these entrepreneurs are from OBC, scheduled caste and scheduled tribe. So there is no better way of helping this class, these people, than giving them easy loan.
But why are the banks so reluctant to lending to the small businesses despite being in the best position to do so? We get a banker's perspective on the other side of the break.
There's a simple matter of getting approvals. Before you can start a business, you have to get all manner of approvals.